Hello traders, Gary Wagner here. It is 11:30 in Honolulu, 5:30 in New York on Friday. Happy Aloha Friday as we say on the islands. It is the first day of November 2024 and this is the evening report for gold and silver, our weekend review. Gold prices edged lower today despite an unexpectedly weak U.S. employment report that significantly missed even the most conservative estimates. It was reported that only 12,000 jobs were added in October, plummeting from September's revised figures of 254,000. Gold futures declined today by $8.20, taking the most active December contract to $2,745.90. We do have a limit order in to buy. However, gold did not dip low enough to fill that order. Spot gold declined by $7.36, a total of 0.27%, taking a troy ounce to $2,736.40. Silver declined 0.69%, taking December silver to $32.57.5. And most of the declines in both gold and silver can be directly attributed to dollar strength. The dollar gained 0.41%, taking the index to 104.422. This first chart is a half an hour standard Japanese candlestick chart of gold, looking at the first day of November, with gold opening at roughly 2761. The jobs report itself is released at 8:30. Gold opened at 2762 and then traded to a high within the first hour of $2,769.70. But what followed was a slow and methodical decline to today's low, with a slight recovery coming into the close. First, I want to cover a trade that we recommended on Wednesday. We sent out a trade alert to buy December gold at the market. Gold was trading at $2,787. We recommended that you place a good till canceled stop at $2,779. We sent out another trade alert recommending that you raise your stop to $2,788. When gold plummeted, did stop us out, as I said, at 88 with a dollar profit. Early morning, we did send out a trade alert to go long December gold, buying it as a limit order at $2,732 and a good till canceled stop at $2,720. However, gold did not trade that low. You can see that the low came in approximately 2 hours before the close at $2,742. Our limit order will remain over the weekend and hopefully get filled on Monday. Gold broke through the 23.6% retracement at approximately $2,760, and the 38% retracement level comes in at $2,733. The rationale for believing we could see a softer market with the election occurring on Tuesday, I would expect that to have a bullish undertone for gold. There could be another alternative model that we will see play out next week, and that is that this fifth primary wave has in fact concluded. If we do a basic Fibonacci extension of wave 1 and then begin at wave 4, because of the Elliott wave rule that says that wave 1 and wave 5 should have equal price moves, that would extrapolate that gold during the fifth wave would trade to $2,797.40. The actual high that came in was just above $1,800.
Hitting a high last week above $35, silver has fallen over 7%, losing roughly 4% of that this week in trading. We have likely concluded our impulse phase and in our corrective phase of our current intermediate wave count. We didn't get the typical Fib relationship in terms of wave 5 to wave 1 being a 1-to-1 or a 0.618 relationship to waves 1 and 3. However, we did get an extension of 1.236 of wave 1 to wave 5. We did get an extension of 1.236 from wave 1 when compared to wave 5, which is a ratio commonly used in Fibonacci extensions. This lines up within pennies of our actual top. According to our current labeling, we have been within our A wave since last week. And since wave A is the beginning or the benchmark wave of our corrective phase, we must wait till it concludes before we can project the following waves B and C. This is a rough guess of where I think those waves could form at. I don't see our current correction dipping below 32.25. Switching to our weekly chart, we can see that silver is still holding up rather well, with this week's candle closing out above multi-year resistance.
This has been Gary Wagner
And Joseph Wagner.
wishing you, as always, good trading. Have a great weekend.